Just asking, kind of take your crystal ball out, and knowing nobody can really see the future, and your views are going to change as new data comes in. But right now, where you're sitting, what is your outlook on how high interest rates are going to go, what the direction of rates is going to go? What do you see the Fed doing going forward?
So I do think that he's going to continue to raise. I think we'll probably see 125 basis points before the end of the year. That will get us right around the 3.5% target. If it was slightly slower than that, so maybe he got us up to 3% and not 3.5% before the end of the year, that would not surprise me. It would surprise me if it was more, and it would surprise me if it was less than that. So I'm targeting between 3 and 350 for the Fed funds target rate by the end of the year. Then,
And
yep.
how much of that is priced into the market? How much are we already seeing that reflected, and how much do you think that kind of hiking path isn't?
I think that's that's pretty much the norm of what consensus is. I think that I think a lot of people would hope that it was less than that. Some people would pray that it was less than that, but I think that that's right around consensus. If it was more than that, I think that we would have he would get a few phone calls.
Sure, and sometimes people comment something along the lines of the bond market tends to be a bit smarter than the stock market. When you say that's consensus, I understand you're saying that consensus in the bond market. Do you think that's consensus right now in the stock market? Do you think that's kind of indicative of the kind of the lows we've seen in June that looks like we might be retesting? Where do you think the stock market is as far as pricing in that kind of continued Fed hiking?
Yeah, so I think that the bond market tends to move ahead of the Fed, and to a certain extent, the Fed is following. So the bond market has already moved us and priced us there. The stock market will price off of the bond market. I think we've seen the risk premium go up a little bit recently. That premium, I usually like to target about 4.5% risk premium for the stock market. We were at about 475 late last year, and I think we're probably up to about 5.1 right now from my calculations. So is the stock market dumb or smart relative to the bond market? That's a very, very good question. And I don't know that there's an exact answer. If I'm talking about the speculative day trader that's buying Tesla, that guy is smart because he's pushing the momentum after, Elon Musk tweets something, right? So, but he has a one-day time horizon. So there's a lot of different players, and there's a lot of different forces and a lot of different reasons people are in the market. I would say we are long-term investors. And again, there's reason from my point of view to be cautious right here, patient, take a wait and see. And it's just not time to be jumping in with both hands.
And I know I'm asking you to look way far out, and I'm not going to hold you to this. But when would be at this point kind of your best guess to when we might see the Fed moving to more of an easing bias versus the hiking?
Yeah, so let's look back at history for a little bit of a guide here. The bear market events that we have seen in the history of the country have happened after the Fed has stopped hiking. Now, I don't think that the Fed is going to hike rates up to something high, way higher than consensus, like 5%. I just don't think that that's going to happen. I don't think that they need to do that. I do think they will be aggressive at getting to their target. Once they reach their target, they will stop, and it will sit there at a very elevated level relative to where it was just 2 years ago. And that should wash out enough of the weak players in the market, the speculative leverage over time, where prudent investors would rather invest. If you've, well, I will use an example. I sat on the board of my homeowners association, and every month we would talk about what we were going to do with our reserve funds. And we were out there getting 0.08%. Some board members talked about, well, maybe we should be buying stocks. And, we didn't do that. But in today's world, if they received 3.5% in a treasury note, they're going to be ecstatic. So prudent investors are going to invest in stuff that's finally going to give them a return. Speculation, at least some of it, is going to come out. And over time, we will weed out those weak players. That might mean that the stock market and the valuations of this market don't really come down until the Fed leaves their interest rate at an elevated level relative to 2 years ago for an extended period of time. So I would expect interest rates to go up for the next 4 to 7 months, and then to sit there, and then we will watch and see what happens. So again, we're going to be patient. These things tend to take longer. I've beaten my head into a desk or a wall as a trader on Wall Street before. The market can, what's the old saying, Steve? The market can stay
irrational longer than you can stay liquid.
Yeah, the market can be irrational longer than you can stay liquid. So I would say sometime next year, if we're patient, we're going to get a better buying opportunity.